Hello there today, viewers. On behalf of the Market 360 advisors here at Stewart Peterson, I'm Bob Davenport, and this is your Dairy Week in Review for June 5th, 2015. So to get started here, let's take a look at how our CME dairy components settled at the conclusion of this week's trade. It was mixed for cheese overall here this week in the spot market, with blocks settling at 171.5. That's up 2 cents on the week. Now barrels settled at 164.25. That's down 2 3/4 cents on the week. So that netted a net loss for the block barrel average here on the week. When it comes to spot butter here, it was an ugly week overall. Butter prices settled at 190 even here this week. That's down 10.5 cents from last week's settlement, which was just over $2 a pound. July whey settled lower on the week as well at about 38.8 cents here, down 2.6 cents on the week. And July non-fat dry milk futures were down almost 5 cents here this week to settle at about 95.5 cents. Now the weaker tone definitely showed up in Class 3 futures here this week. July led the way, down 51 cents from last week and settling at $16.91 here this week. August Class 3 prices settled at $17.08. That's down 34 cents from last week. The 2015 calendar average price for Class 3 futures is now at $16.56. That's down 18 cents from last week's settlement. So let's take a look at what we did see in our spot markets here this week, which is generally the big driver of what we see in Class 3 futures. So here we have a weekly chart of the block barrel average. You can see that we've been in a pretty steady uptrend here in the spot market. We did take a little bit of a turn here this week. Prices opened up higher earlier in the week, but there was a lot of selling pressure in the spot market here in cheese. There's a lot of selling going on in both blocks and barrels. Volume was pretty high. On the week, we only netted a 0.3 cent loss on the block barrel average. As we saw earlier, blocks actually maintained some gains on the week while barrels sold off. So the demand is still pretty firm here in the cast cheese market, but as of last week and this week especially, there's a lot of selling pressure out there. Those sellers are bringing a lot of cheese to the market here to sell, but right now the buyers are willing to scoop up those carloads of cheese here and really limit any downside. The real risk would be if those buyers decide they have enough cheese and they step to the sidelines for a little bit. I would imagine the sellers are still going to be there, and they're going to then have to offer those prices quite a bit lower to get those buyers to step back in, and that could be an ugly situation for the Class 3 market. So the spot market is definitely something to keep an eye on here now that there's quite a bit more selling pressure than we've seen throughout this rally from our January lows. So the block barrel average on the week, though, did settle at 167 7/8 here. Again, that's only down 0.3 cent on the week, but the selling pressure was enough to pull Class 3 futures down quite a bit more than that. So shifting over to our spot powder and butter prices here now. Powder has been the one product in the spot market that just really hasn't seen any support here. You can see that powder really topped out back in December of 2014 actually, and sold off straight through to the present prices here right now. So as of this week's settlement, powder actually settled at 88 cents a pound. We were down another 2 3/4 cents here and put in a new low from the record highs from back in 2014 here. So again, just continues to be a lot of selling pressure, not a lot of buying interest, even at these prices. I mean, 88 cents a pound, you can't see it on the chart here, but that's only 5 cents off of the low from 2009. The 2009 low in spot powder was just 83 cents. So if we continue on this trend, we could be at those 2009 lows in no time here if the sellers continue to offer prices lower without those buyers stepping in. So that is kind of a warning sign here. We've seen a lot of divergence between butter prices and powder prices now. You can see that they typically really follow each other. Sometimes powder can lead the way, which could be a risk factor. You can see back in 2014, powder prices topped out first. It took several months actually before butter followed suit along with cheese and sold off here. But since January, we did find a low. Powder rallied back a little bit, but then dropped to fresh lows. Once butter found a low, it's continued to rally here, and you can see just how wide this spread is getting between butter and powder here. So now Butter did have an ugly week though. We were down 10.5 cents to settle at $1.90, where the real risk lies is if butter sold off to get in line with where powder is. That could pull butter prices down significantly, pull class 4 prices down quite a bit if that scenario unfolded. The other alternative though to how this spread could be narrowed would be if powder prices came up to get more in line with butter. That would be a supportive situation overall to class 4 prices and really support probably a class 4 rally. So things to watch there is the risk of powder prices continuing to go down. We're close to those 2009 lows. Could pull butter prices down, but if butter can sustain these levels where it's at, it could support powder, and you could see powder rally to get in line with where butter is at. So those two things are definitely something to keep an eye on when it comes to the class 4 market. So let's take a look now at our class 3 chart. So here we have a second month continuous class 3 chart. This is a weekly chart, so every bar on here represents 1 week's worth of trade. The second month contract is currently the July contract. June rolled into that front month spot on Tuesday of this week, making July that second month contract on the board here. So this chart looks a lot like the cheese chart, and rightfully so. We found a bottom back in January. We've been rallying really ever since, more of a counter-seasonal rally through springtime here. We did see some weakness here this week though on the July contract. We rallied 77 cents on July class 3 last week just to sell off about 50 cents here this week. So we netted a gain overall, but we did settle at $16.91 on the July contract here this week. Unfortunately, that's down 65 cents from this week's high. So took quite of a beating here midweek as the sellers offered a lot of cheese. That pulled class 3 prices down quite a bit, but overall you can see that we're holding up pretty nicely. Again, the risk goes back to probably the cheese market. If the buyers decide to step aside and the sellers push things down, that could pull class 3 prices down along with it. If the cheese demand can remain firm, could be something that supports these class 3 prices to support more of a rally going forward. So again here, things have been very, very choppy. It's been kind of tough to get a read on what the market's thinking here. We've been seeing very big week-to-week price swings, but within those week-to-week price swings, we are netting week-over-week gains overall and keeping that uptrend together, which is a good sign. So looking at the week ahead, not as much as far as dairy fundamental reports go, but we are going to have a USDA supply and demand report as well as crop production numbers out on Wednesday of next week. So something that could impact your feed prices quite a bit if there's any surprises in that. So aside from that, that's going to be it for us here today. On behalf of the Market 360 advisors here at Stuart Peterson, thanks for watching and have a great weekend.